Hey there, good morning everybody. Hope this video finds you all doing well. I'm just going to show you a couple Slinky setups on the NQ this morning pre-market, so you guys who have the webinar or have viewed the webinar can get a little bit of follow-up. So I hope you find it helpful. If you're interested in the webinar recording, you can just go to easyemunitrade.com. And then you'll see there's a tab at the top of the page that says April 1st webinar recording. So what you're looking at is NQ on a 16 range. If the market's very fast, you're going to need a bigger range chart size. If it's slow, you can use a smaller one. And then what will gauge it is you'll see over here I've got what's called the range bar predictor, estimating the high and the low of the bar. If you're finding that whatever you're trading, the bars are forming so quickly that you can't get your order in, then up the size. Okay, it's really that simple. So the setup is on a range chart. We call it the Slinky. It's been around for quite a few years, at least 5 or so. So this and the 1 minute setup are my two favorites. And so we always use the double stochastic, and I'm using Gordon's indicators, which will mark the direction that I'm looking for, and then the other indicator marks when I've got 40-point gaps, and then the little dipsy doodles here, which often the little dipsy doodles here where you see those yellow arrows is a heads up for divergence or pullback. And so you can see right there price higher highs. We've got lower highs on the green stochastic line there. So if you're familiar with divergence, you know that that would be a heads up for a at least a couple bar pullback. Okay, so the setup, looking for the close above the super trend stop. All the settings are in the webinar, you guys, so just refer back to that or the presentation slides from it, okay? So closing above the super trend stop, green line above the red, I can take that. So mainly what I would want to know is, I'm just going to kind of scrunch this up. I would want to know if I took that where possible resistance would be. So I'm just going to look over to the left here, and you can do this on your 1 minute chart, 5 minute chart, 15-minute chart, whatever you like. I'm just going to do it real quick here. I'm just looking for little areas where price was struggling and just putting a line there. So if I were to take the short here, green line below the red, what will go through my head is that I've got a 40-point gap here, so likely it's going to stall or bounce before and if it can move lower. So this one here I'd be a little hesitant on taking, but if you wanted to buy a bounce off a strong area of support and you saw that, that would be ideal. Same here. You could see here you've got 40-point gapper, and so the 40-point gap, generally price is going to move in whatever direction the green line would have to move to find its way toward the red. So this would have to move up, this would have to move up. So technically speaking, it will go sideways or move in whatever direction the green line would have to go toward the red. And that's on the range chart, so it's a fairly fast chart. If you're looking at the 40-point gap on a 1 minute chart or a 5 minute chart, you'll find that price will generally go sideways to fill that space. All right, so here, not closed, never really closed below the super trend stop. Even if it did, you can see my red lines above 80 here and overbought. So the short would be a pass, not valid. Here, we get the buy right here, closing above the super trend stop, green line above the red. So we could take that, and looking over here to the left, realistically, we'd be looking at the high of the day as a possible reaction area. And this is the one we just talked about, short. Right here, this buy, closing above the super trend stop, green line above the red. So what would go through my head is that if I take this, possibility is that I could get stuck up there around that 75.75 or 76 area. So I would have to decide if there was enough room to take it. The entry would be a tick above the high of this bar here, which would be 73 would be the entry. So you'd have to decide if that were enough room for you to take it. And then obviously you can see it trades through it and holds here for at least 5 minutes. So realistically, if you're sitting in this trade and it's holding this general area, you could probably get out, somewhere around 78 or 79. It does manage to pop eventually, but again, it's always up to you how long you're willing to wait for the setup to hit your target areas. And once it hits your target area, you can drag your stop up or use or have your limit order to exit there. Here we get close below the super trend stop on this bar right here where I have it marked. Green line is below the red. I don't have a 40-point gap yet. That actually comes after I'm out of overbought. So I could take this short. So what would go through my head? Okay, we could see this area over here at that 75 area, holding back here. So I would assume that it's probably going to struggle there, at least initially. So I, again, have to decide if there's enough room for me to take that. Entry would be one tick below the low of this bar, which would be 79 with, let's say, 75 there. So you have to decide enough room, yay or nay, right? All right, here, closing above the super trend. Green line technically above the red, right? But we're getting our heads up for our 40-point gapper here, all those little marks there. And you can see once it hit that resistance area that it pulled back off of there. All right, so that's just a little bit of a review. So rewatch the webinar. And if you're in a sideways market, you'll find that you'll have more of these 40-point gappers. And how you could make use of that is, for example, here where you get that 40-point gap, this is telling you likely price is going to go sideways or down. So if it's hitting a resistance area, for example, and you wanted to short, anticipating it finding its way down to the support area, if you have enough room, then this is giving you the heads up that, hey, you could likely get an entry and find your way down to support. If it's a very fast, wild market, I would be very cautious about anticipating support and resistance areas to hold to the tick, okay? And then here as well, you could see this one hitting resistance, 40-point gapper, and then, support is down here. All right, and actually, let's see, did this one set up while I was sitting here chatting? This one wouldn't have been valid. Closing below the super trend stop right here. And looks like it might have been borderline. If the green line was below the red, honestly, I wasn't paying attention. But if it was, then it would be a valid short. And then you would look to see, okay, where's it been holding? And decide if you want to take it or not. Now here you have a little divergence on this little bounce. Equal lows. While on my green stochastic line, I have higher lows. So that's a heads up for at least a bar or two bounce. And then if you can't see it on your range chart where support and resistance areas are, open up your 1 minute. Pretty easy to see on that, right? Just draw some lines. If you can't see it on the 1 minute, look at it on a 5 minute. Where are the common areas, right? So always, where is price struggling? So if this can move lower, realistically, we're looking down here at this area around 50 and change. All right, you guys, I hope you find that helpful, and I hope you have a fabulous day, and we will chat with you soon. Take care, you guys.